NVIDIA may be America's top performing stock after more than doubling this year alone. But if you're holding NVIDIA or thinking of buying it to get a stake in the 7 trillion AI market, you're going to want to see Mark Chaikin's new AI prediction first. Mark is a regular on many major news outlets from Fox Business to CNBC and built the stock indicator Wall Street uses to find winning stocks. His award-winning system flashed buy on Tesla before it climbed 335%, Moderna before it climbed 300%, and Riot Blockchain before it climbed 10,090%. It also found NVIDIA at the start of 2023 before its massive bull run. But right now, Mark is stepping forward to warn people to stay away from NVIDIA. My system has indicated that NVIDIA is no longer the best stock to buy to profit from AI, Mark says. In fact, it just flashed buy on a totally different AI stock. And today, he'd like to hand you the name and ticker symbol of his #1 AI stock to buy right now. For a limited time, you can get this information for free at aifrenzy2023.com. Again, that's aifrenzy2023.com for a free copy of his new report.
Hi, this is Daniela, and welcome back to the Daniela Camboni Show as we continue our coverage. Well, I'm still calling it Denver Gold, John.
Well,
John Doody, but it's not
the Denver Gold
Forum of the Americas, whatever they're calling it. But please welcome back to the show, John Doody, editor of Gold Stock Analyst. I always say it, it's the best gold newsletter out there.
Well, thank you very much for that. I think so too.
I'm not just saying it because you're my friend. All right. How's the show been for you? What's the sentiment like?
Well, everybody's optimistic at a gold show, and it's no different. Although, it's hard to tell because you're only talking basically to insiders here. You're talking to big institutions that already have gold, and you're talking to companies that are producing gold. So not too much in the exploration side of the business at this conference. So it's mostly optimistic, and people looking at the big macro picture, U.S. debt. And the Fed's going to do something later on today.
I want to talk.
And we don't know what. But I focus on the companies. This is our 30th year of Gold Stock Analyst newsletter, and we've stayed true to our focus of looking at the data and let the gold price do what it wants to do. Which, by the way, for this, gold has been the best performing liquid asset I know of since 1971 when the price was set free. $35 an ounce to $1,935 now is an 8% per year compounded growth rate. I don't know of any liquid asset that's been that good. Maybe you could find a stock that's been that good, but who knew what stock to buy? The gold as an asset class has outperformed everything.
I'm happy, so happy you brought that up. Actually, there's 2 points I want to circle back on. So one, you're basically bringing it back to what I brought up in the panel with Robert Friedland, Frank Giustra, Pierre Lassonde, 3 titans of the industry. I said, look, mainstream media, at least in North America, has been painting gold as being extremely boring, having done nothing this year, paling in comparison vis-a-vis the NASDAQ, vis-a-vis the S&P. We're not seeing that in Asia, right? And my question to the panel was, well, is gold just getting a bad rap? Because to your point, gold has been doing exactly what it's supposed to be doing. No, correct?
You're exactly right. And gold doesn't have the big commission, big money managers that make money managing money behind it. It doesn't have that interest level because it doesn't have the profit level for the people in the business of managing money. Yeah, and so that it, but as a form of protection of savings, it's outperformed everything.
When you're putting the metrics in to forecast the price of gold and whatnot, let's get your thoughts on what the Fed's doing. I know in the past you've said they're backed into a corner. You didn't see inflation slowing down anytime soon.
Well, I think we're going to move to a new normal. The accepted rate of inflation for the last decade has been 2%. I remember when it was 0%. So I think we're going to get to a point where this 3% is a target, or maybe even 4, and we'll just learn to live with that. And if you have, if you're invested in a way that you participate or profit from the higher rate of inflation, you won't be bothered by it, and that's just the way it's going to be. And there's no way that you can't have Powell can't do a Volcker and jack up rates to 20% to try to stop the inflation. The politicians won't take it anymore. The Democrats certainly won't, nor will the Republicans. They all want to stay elected and stay in business, in the business of Washington D.C. and there's a tremendous pressure to continue to mush along as we've been doing.
When we started the year, John, there was so much talk about the U.S. is headed into a recession. Since then, those talks have calmed down. I mean, what's your take on the state of the U.S. economy? Because the data is showing it's strong, but when you speak to people, real people, they're not feeling that.
Well, Biden economics is working, I guess, and people like to complain. And it doesn't mean, even if your portfolio is doing okay and you've got a job and your income is okay, you still got something to complain about. And I think that's just a natural state of affairs. And you have one whole party that can only do complaints. They can't do anything. The Republicans can't get anything accomplished because they're spending all their time complaining. Do something, please.
Please. You said, well, obviously your newsletter is centered around picking winners in this market. Is it becoming harder and harder to find the winners in gold and silver?
Yeah. I don't know. There's some good companies out there. We added one recently that we added a major miner that, based upon it's so undervalued that based upon our metrics. And the main one we use is operating cash flow multiple. This is a major miner that sells for around 3.5, 4 times its operating cash flow. And the typical stock in our coverage list, in our 50 stock coverage list, the average is 6 times operating cash flow. So this stock that we've made a top 10 in a couple of issues ago has got a potential to double. And it's a multi-million ounce a year producer that pays a dividend. It's a widows and orphans.
Well, I think I know
stock,
the one you're talking about.
And it has an appeal.
Can you say?
Yeah, it's Kinross. Everybody, the gold investors never forget, and it takes a long time to change people's opinion. And Kinross was saddled with, I don't want to say, saddle's really the wrong word, but it had some mines in East Russia, which were very profitable. But you don't really want to be in East Russia. And then they bought a second mine. The prior management way overpaid for this mine in Mauritania, which was nothing but problems. But Kinross has solved both problems. The Russians took away the mine in Russia, and the Mauritania mine is straightened out now and running profitably and smoothly. So but the investors still remember Russia and Mauritania and problems.
I would love to shadow you one day, John, to see all the homework and research you go through because of all the miners, of how you filter it down.
Well, we follow 50 stocks roughly, and they're all basically North and South American producers. We don't follow West Africans, for example. It's too hard to get information. You don't really know what's going on in the local communities. And the same thing's true in Australia. They only report twice a year. So you're always behind the 8 ball, and of course they're on the other side of the world. So, but we find plenty of companies to follow here in the States, and our audited track record is on the website. We're the only newsletter in the world that I know of that is audited, independently audited, every trade, every buy, every sell.
And just a word, I know Garrett Goggin covers silver, but on the silver front, finding a true silver play.
It's tough. It's tough. There's not even the silver companies want to go to gold.
Right.
They're all buying gold mines. So the silver is a really difficult metal. For years it was thought of as a byproduct, and maybe that's the right way. There are a couple of good silver miners, Silvercrest, for example, but they managed to stumble along the way. One of the big names in silver mining was Coeur d'Alene. And when I started, they had maybe 30 million shares. They probably had 300 million shares now. You cannot profit your your investors when you're going to make incremental huge increases in your shareholder base.
John, I don't think I ever asked you this question, but with the BRICS nations talking about the possibility of a possible new currency backed by gold.
Yeah, good luck.
As a gold guy.
Yeah, it's not going to make any difference. The dollar is supreme. It's the unit of currency that's used in trade, and it might be interesting if they want to get a gold-backed currency in the BRICS, but I don't think it's going to do anything over the long. Certainly not in my lifetime.
You believe the U.S. dollar's reign not ending anytime soon?
Well, no, it's diminishing. But these things take a long time to change, and there's no real substitute out there for it. How much trade is getting done in the real, Brazilian real? Certainly it's in Brazil, but how much in the United States is impacted by the real? None at all.
John, just a final thought on the trillions of dollars. Just a final note: the trillions of dollars of debt the U.S.
is past 33 trillion today.
I saw a crazy statistic, a breakdown of how much that is per person, per household. It's absolutely astonishing.
Yeah, and it's not going to change. Politicians want to stay in office, and it doesn't matter what party they're in. They're going to continue to issue more debt. It's easier to issue debt than it is to raise taxes to fund policies, and until the dollar swoons, which I don't think is going to happen for a long time because there's no alternative. As Pierre was saying yesterday, what else are you going to use? It's going to continue on, and one way to look at it, gold may be 1,935 now, but what's gone up? Gold gone up or the dollar gone down?
Let me ask you this. Well, actually, I have two questions. Is it a tougher sell with 6-month treasuries yielding 5.5% to make the case for gold than when they were 0%?
Well, I think
or relatively zero.
Yeah, I think the fact that gold is at 1935 means it's not that hard to sell, because certainly the high interest rate that's available now that's what competes with gold is interest rates, and the fact that gold is held up so well with high interest rates, I think that means that gold itself is strong.
Quick note on oil. Last question: have we seen the top in oil?
Oh, I don't know. I'm not an oil guy. Nobody wants to buy Russian oil, and the Saudis don't want to produce it anymore. So I guess it's going to be artificial constraint in supply anyway. But those don't last that long, and it'll pop back out. And maybe all of this solar and other alternatives, maybe they'll come more to the fore.
Are you excited about uranium?
Just like everybody else, no.
Except the uranium guys.
Yeah.
They're like, have you seen the price?
Yeah, no, the fundamentals are great for uranium, and but it's such a long time coming.
Yeah.
People don't have a 10-year horizon and get invested anymore. It's hard to have a 10-week horizon sometimes. True.
John, always a pleasure catching up with you, and we will see you at the Stansberry Alliance Conference.
In October in Nevada.
October in Nevada. Come join us. Come meet John Doody in person, and myself.
Yeah.
And we'll have a great time.
Great. Sounds good to me. See you there.
I see you there, John. And thank you all for watching. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Camboni Show. Thanks for tuning in.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.